So, a warm welcome to all the participants. Okay, today is not going to be a day, wherein you are keeping your videos off. Our speaker has requested all the participants to keep their videos on. So, just try that you can show their faces and keep their smiling faces on. I see a lot of similar people today, Ankit, visiting. So, we'll begin the seminar in 3 minutes from now. So, hi Radha, you finally joined. I was waiting for you on the call. So today you have to also on your videos, Radha. See Ram, Deepika, Tushar, hi Chetan. Vanita. So they have been religiously attending our all the master classes. Raman, good to see all of you today. Okay, so we begin in a while. Okay, so it's 3 p.m. Time to begin with our today's webinar. Welcome, ladies and gentlemen, to this wonderful Saturday afternoon. As Warren Buffett rightly said, only buy something that you would perfectly happy to hold if the market shut down for 10 years. And it fits perfectly with today's given time. Demand for expert is continuously increasing in all industry. Expert advice is essential for growth, especially when it narrows down to the number and money. Implementing suggestions of the expert has been. You must have a legal advisor for the tax and other legalities. But what about the organizational finances? Lately, wealth management has gained popularity among the individual as well as the corporations. Everybody wants to invest in the right place and to avoid risk as much as possible, and thus the demand of wealth managers is rising everywhere these days. So, what is wealth management and what does wealth managers do? Let's hear it out from our expert today on wealth management. HR Association of India welcomes you all to the 2020 Dialogue, the masterclass series on the topic wealth management. To know more about HRAI and its events, I would request all the participants to visit the link and details posted in the chat window. I request all the participants to kindly follow the webinar guidelines mentioned in the chat window. It would be great to have all the participants' feedback. We'll be running a poll before the Q&A session. Request all the participants to kindly give your feedback on the session. I now take the privilege to introduce our esteemed speaker for today, Mr. Ankit Jindal. He is a person who loves number crunching. Management of personal finances is one of the most interesting areas for him since childhood. He keeps exploring different ideas to maximize the return of his investment. He is a graduate in computer science engineering and have done MBA in international business from Delhi School of Economics. But it doesn't limit his work domain. He is actively involved in educational industry from last 1 decade. He has been a guest speaker in top-based schools for India on various topics on finances. He is catering individuals to make them learn various financial instruments to make their investment journey smooth. Presently, Mr. Ankit Jindal is serving at Ministry of Finance, Government of India, in the capacity of Inspector of Central Tax. You can also follow him on LinkedIn at the link mentioned in the chat window. Without taking much time, I now welcome Mr. Ankit Jindal to take over this session. Over to you, Mr. Jindal.
Yeah, thank you, Shyam, for the brief discussion, or I must say the elaborated discussion as discussed. Thank you everyone for joining the session. Thank you HRI for allowing me to have a discussion with so many people and pass on my experience and my learning throughout my journey of this wealth creation or wealth management, or either understanding it, learning it, or sharing it. So before starting the session, as a disclaimer, I just want to introduce this thing that whatever discussion we are going to have here is just for the educational or the learning purpose. So before taking any action on that, you must discuss it with your financial advisor, take proper suggestion, and then put your money in any of the investment idea or anywhere else. So just directly go to the discussion as we are going to discuss here, and that's a simple disclaimer from my side before starting the session. So many a times it happens, as I was discussing with Shyam also, that people are there who are good in learning, they are good in work, and they are doing great jobs, they are doing wonderful businesses in their life. So, but the thing, when we enter into a professional life, we always think about the package, and we always think about the salary, that when I switch to the next job, when I am entering into some business, what should I earn, how much should I earn? But we very less people I have seen in my career till now who are discussing about the savings, who are discussing about the investment, that whatever we are earning, where we need to put that on, so that that money itself can bring something to in our portfolio, and that can maximize. Because after some years, we usually think, after reaching to 30 40s, we start thinking of that for the next 5 years or for the next 10 years I'll be working, and then I want retirement from this particular job or from this particular business, so that I can enjoy my life. But the pressure keeps on there, because now you'll be having family at the age of 40, which will be dependent on you. So you'll have to take care of them. So at that moment it become very difficult. And when I discuss with my friends, with my colleagues, with my I must say students, and when we discuss about that, what is their idea of investment, so many of them say that we'll see at later age. Right now we are just enjoying it, and after 5 years, after 10 years, when my package will become this much, when I'll be having like I would have enjoyed my marriage for 5 years, or when I'll be married, when I'll complete graduation. So they have certain limit in their mind. But why should not we start talking about it at the right moment, or I must say at this moment? And why should not we start thinking about it? So I'm not saying you just start investing from the day itself, but you can have something in your mind, so that when the right time comes, according to you, you can take action, and it will help you in a longer term. So there are different type of goals which we are going to discuss here. We are going to discuss about the equations. I must say the saving equation, or the financial equation in a very layman term. So I'll start with that discussion by sharing my PPT. So the idea about this discussion or the flow of this discussion will be this way, that for the first 30 minutes, almost approximately, I'll be discussing from my side, and then I'll keep the discussion open for each one of you, so that I want to cater your queries, will take your questions, uh, and we'll discuss that, so that everyone and you will enjoy that and you will learn from that. Otherwise it will become a very monotonous if I'll just keep passing on gyan which you have listened from too many news channels. There are many other portals where you can see about this thing and you can learn from there. But when you have some personal doubt, personal query in your mind, we'll be discussing that thing first. Okay. So Sham, is my screen visible to you?
Yes, Ankit.
Okay. So there, the topic again, personal wealth management. And again, I thank you, HRII, for making me a part of this dialogue series on master classes. So as I discussed that when we think about the equation in finance, so we have this simple equation that our saving should be equal to income and minus expenditures, whatever monthly expenditures or the annual expenditures or the daily expenditures we are expecting, then we are left with the saving. So my idea about our, oh, I must say that financial equation or the personal wealth equation, or when I'm looking at my portfolio, when I'm looking to create it, that my personal equation is, when I look at my personal portfolio, that my expenditure should be equal to income minus savings. So I keep my saving aside and I advise everyone, those who are interested in this, those who are looking at the bigger picture, those who are looking for the long term goals, that you should keep the saving aside first and then you should think about your expenditure. Now people may ask that, Ankit, that how much should we save from our income? So it depends on person to person, their liabilities, their roles in their family, in their life. So, but I must suggest that everyone at least should save 25% of the savings, at least 25%. When I must say that when I was my initial year, or I must say formative year of my uh, career, I was saving around 80% of my income. So that was the period. So now that percentage has gone down, because when we move into the our journey of career or the journey of life, so our expenditure usually become more, but again your income will keep on increasing. So the percentage of saving will be less, but again if you look at the amount, that will be much more bigger than the previous amount when you started that. So equation should be kept in this way, that you need to take your savings aside first, and that should be at least 25%. So that may be 30% for someone, 40%, 50%, and 60%. So if you are saving 50%, I must say that you are never going to face any problem in your future. So this is the first and the important point, that looking at the expenditure, I must save something first, and then whatever I am left with, then I should think about the expenditure for that. Okay. Next thing, if we go ahead, that there is another important thing, that we should have an insurance for sure for ourselves when we are looking for wealth management. That wealth management is, we are creating wealth. We did not receive any wealth from our ancestors, so we are creating it right now. So in that journey, again, in this wealth creation journey, we should be insured. Okay. And as you have seen that this corona pandemic is going on, so we should have this health insurance and term insurance with us. But now again, problems are there, that people get confused with the thing, that what is health insurance, what is term insurance. Should read about it. If you are taking some insurance from some company, you should go through the disclaimers again, and you should go through the policies of that particular company, that what they are providing it to you. I'll just spend few minutes on this slide, that many of the MNCs are providing us the health insurance, even the term insurance. So who should take the health insurance and who should take the term insurance? Okay. So the one who has started earning or has not started earning even. Okay, so everyone, I must consider in that phase that everyone should have an health insurance. Okay, so if I talk about myself, I should have an health insurance. If I am a student, I should have an health insurance. If I'm a kid also, then also I should have an health insurance. So if I am a kid who will be having, so my parents, okay, will be taking care of that. But everyone should have the health insurance. So if you are working in an MNC, so the companies usually are providing 3 lakh rupee, 5 lakh rupee, 10 lakh rupee. It depends on your profile also. Okay, that much insurance are being given to you and to your family. Okay, but if you feel that your salary is much higher and that the insurance provided by your company is not sufficient, so you can take some another insurance at your own level. Now if I come on to the life insurance, who should have the life insurance? So if you are a student, I must not suggest you to go for a life insurance. If you have just started working, I again, if you are working in an MNC, so company will be providing you some life insurance for sure. But if you are doing some job at individual level, or if you are doing some business, so there you will not be having some any life or term insurance. So should I take it or not? So again, if your family is not dependent on you, okay, so if your family is not dependent on you, so I must say for that period you can avoid this thing. Okay, but if you are having someone dependent on you, even your parents, your relatives, your wife, your child, okay, if they are, there is some terms and condition or having any scenario, those who are dependent on you, then definitely you should have a term insurance. Now what should be the value of that term insurance, that on maturity how much you should get that? So term insurance should ideally be the 10 times of your annual income. So if somebody is having a 5 lakh annum per package, so the term insurance would be of 50 lakh. Okay, if somebody is having a package of 20 lakh per annum, the term insurance would be of 2 crores. So it's a simple equation. So but when should I have that? When I am having some person or some any of my family member or my family dependent on me, that if something happens to me in future, then who will take care of the dependent, or the my family? So this term insurance, the insurance company will provide them enough money, okay, so that they can survive ideally for the next 10 years. As we discussed that it would be 10 times of your annual income. So that would be there. Okay, uh, now if I go ahead, so now we come on to the goal planning. So we'll be discussing more in future about this topic. So that goal planning, it can be a short term, a medium term, or a long term. So when I start some job, okay, or if anybody is starting job, people usually have their short term goals. It can be either purchasing a new mobile phone, okay, it can be either purchasing a two-wheeler or a four-wheeler. So all those, or if there can be, if somebody is getting married, so they will be having that I should go for a honeymoon at some destination, I should be having some type of a luxury thing during my wedding. So all those things which you are looking in near future, in 1 year or 2 years or 3 years, so that period is considered as short term period. So for short term goals, if you are having something, so you will have to consider that, and you will have to start saving accordingly. So the equation which we discussed earlier, that my expenditure should be my income minus my savings. So my savings will be decided from these three goals. So which goals I am having in short term, which goals I am having in medium term, which goals I am having for long term. So medium term goals, maybe like again, it may have the period may decide from 3 years to 10 years, and the long term goals which are having more than 10 years. So when you are thinking about more than 10 years, or in future when you are ahead of 10 years, so that will be considered as the long term goal. So where should we invest? How should we start investing about it? How much should we invest in this, and what all different methods are we having for that? So that I'll be taking queries from your side, so that we'll be discussing about that. But short term, medium term, and long term. So when we start planning even about these three goals, my idea is that before looking for your goal planning, okay, when I am looking for my future, at least I should save my present first. Okay, for that my suggestion would be, and which I am following, or which I started in my again formative years, and which I suggest to all my clients and my friends, my relatives, that at least if some new person is coming into the job, or if you are already there, at least in your saving bank account or in cash, at least you should have 3 months of your salary ready. Okay, and looking at this corona pandemic, I must say now you should have 6 months of your salary in your saving bank account. That means if something happens, if something wrong happens, if any mishap is there to your job, so that you can survive for the next 6 months, okay, without taking any stress. I'm not saying you should not take stress any, but that should not be stress. There you should need to plan that how will you get a new job. So in that journey of getting a new job or getting something for your career, so for that period, for that next 6 months, you should not be worried about your income, because you have 6 months of your monthly income in your bank account ready, which you can spend anytime. It should be kept very separately. You may have another saving bank account for it, so that you are never looking at it, and it's an emergency fund which you will be or which will be helping you. Earlier, when the corona pandemic was not there, so as I said you, it was around 3 months salary, or I must say your monthly expenditures multiplied by 12. Okay, that much amount you should keep ready in your emergency fund, which you may require anytime. People make mistakes over there, that initially they create a emergency fund for 3 months, for 6 months, and then when they require, they start using money from there. And then I am not saying you should not put or take out money from there, but if you are taking money out from your emergency fund, you again put the same money back to make it at the same level. But many people usually don't do that, and they start thinking the money is kept aside and nothing is being generated on that. So that is what the emergency fund, I am not expecting any return on that money, so that is my emergency fund. So don't get too much bothered about that one, that fund, that it is not returning anything to you. If you feel that rather than keeping it in the saving bank account, if you feel, you can put that amount in the fixed deposit, where you will get some little more returns than the saving bank account. So that much you can do, but at least that much fund should be ready with you. Then I must think about the short term financial goal planning, medium term, and the long term. Okay, we'll be discussing it further on related to your queries. We have heard about this and have read that never put all eggs in one basket. So people usually think that when we are going for short term or medium term, again, when we are making any goal planning, so where should I invest that money? Okay, from where I can get the multiple returns. So everyone will suggest you never put all the. So people are thinking or interpreting this statement in many different ways. I have met many again, my students, my friends, when I ask them, when I discuss with them this statement, they give me different interpretations. So when I put, somebody will say that it means that I should not put all my money into the same saving bank account. So they put their money in 3 4 different saving bank accounts. That is fine. Somebody will say that this means that I should not invest all my money into the same stock. Okay, if you are investing into the stock market, so I should invest the money into the different stocks. But people again make mistake over there. People, if they are betting on FMCG sector, if they are betting on automobile sector, so they purchase the automobile industry. If I talk about, they purchase these stocks of different companies from the same sector. Okay, rather it should be done, you put your money in different sectors. Again, if you are just thinking about only at that particular part, that when I am investing into the stock market, I should invest in different sectors, so that is again wrong. You think about the different segments also. So in stock market, when I enter, so there is one direct equity which we usually trade on the stock exchange. There are mutual funds also, there are debt funds also, there are index funds. Okay, there is gold, so you can invest some of your money in gold also. So there are different categories. I should not limit myself into the one category itself and then looking at the different products available over there. No, I should look at the different varieties or different categories in a broader way. So if I talk about that, what different categories you can think about. So So a good balance of debt, equity, and gold would be there. So just in a brief, again, I'm just touching upon the points that what is the difference in debt, what is the difference in equity, what is the difference in gold. Those who are the new people to this type of discussion. So if I invest something and I'm expecting that my capital, whatever I am investing, it should not deteriorate. Okay. So if I just take an example of saving bank account, if I put some of my money in saving bank account, I know that this capital will not get reduced. Even I'll get some rate of interest on that. So it may be 3% in the current scenario, 4%, 5%. That depends on which bank or in which bank you are having your saving bank account. So that is what kind of a debt securities. So in debt securities, you will be having, I must say, different corporate bonds will be there. There are government bonds are there where you put your money and there is very less risk. I'm not saying that there is no risk. There is very less risk that your capital will deteriorate. Okay. So people usually put their money in debt fund just for the sake of that their capital will remain intact. Okay, I can have that much money at my home also, but again I'll be worried about that some this money may be stolen by anyone from my home, so I'll be putting it in some of the locker, okay, in the bank, so that will take some of my costs because annual charges will be given to that one. So people usually invest in debt funds for the reason that the capital will keep on increasing, okay, timely, but not at that much frequent rate. So in debt funds, if I take, annual increment will be around 8 to 10%, okay, which is more than your fixed deposit funds, okay. But again, there is slightly more risk than the fixed deposits. So people usually prefer this when they are balancing their portfolio. The equity securities are those when we start investing directly into the stock market. So there is high chances of risk. Okay. So if the stock market is doing good and your stocks which you have chosen or your mutual fund or any again securities which is directly having the underlying values as equity, so there will be again upside and equally downside is also available there. So these are more riskier. So but people usually invest, they have proper study, they have proper knowledge. So taking help from your financial advisor, you should put some of your money in equity. So when should we start investing in equity? So I must say when we are in the formative years of our career, our proportion to debt should be, my saving proportion or my investment proportion to debt should be very less, while my proportion to the equities would be more. Why? Because the equities are used for wealth creation for a longer period of time. When you are having a long term goal, so where should I put my money? Should I put my money in debt? No, because it may happen that you might have seen, if you are watching the stock, if you are watching the news, if you are regularly following the stock market, you might have heard in March 2020 when the corona pandemic, when the lockdown actually hit to our nation. So the index, okay, the national stock exchange or the sensex, these two were corrected, or I must say there was a crash. It crashed almost 40% from their highs. Okay, so if that happens, so equity also, if you have put your money in equity, that will go down. Okay. And now it may take 6 months or a year or 5 years to return at the same level or even go higher. So if I have put my money in equity today and tomorrow if the market crashes, my money will go down. Okay. And if I'm in need of money, I will not take, if I'm in emergency, definitely I'll take whatever money I can get from there. But if I have invested properly, I'll wait, and that wait can be for few months, few years, or even a longer period. But in a longer time frame, if I look for 5 years, 10 years, or even more, then equity will give you a wonderful return in comparison to debt. So if I'm having a medium term or short term goal, I should put my money in the debt securities where the risk of getting your capital deterioration is very less, and you will be getting some good returns better than the fixed deposits. And by getting that much return, you will be beating the inflation also. okay, where the prices of goods or your services which you are taking from the market is being negotiated with that. And the third thing, which is gold. So gold is again, so there is correlation between equity and gold. When the prices of equity goes up, okay, usually the prices of gold goes down because people have a balance in these two things. So if the stock market is doing good, people usually put their money out from gold and will put in equity, so the equity will go up and the prices of gold will go down. When there is some panic in the market, there is some bad news, there is some type of wrongdoing in the market or in the nation, so then the prices of equity will go down and people will start investing their money in gold. So it will keep a hedge in your balance. So just for your information, when to start investing in gold. Many people usually think, or I must say the people like us who are busy in our jobs and we are not able to keep a track on all these things, the news comes to us at a very later stage. So now we are wondering that the gold was at 55,000 for 10 grams. So should I invest in it? It will reach to 75,000, but already it has come from 40,000 to 55,000 for 10 grams. Now, should I start investing in it right now? So no, I must not suggest you to start investing in right now because it has already made a good move. Okay, so if the rally has already been done, I should not buy or I should not invest at the top. There will be many moments when you will get chances to invest at the good price, and the good prices are when the prices are low of that particular securities in which you want to invest in. Okay, so I think this much discussion is enough for everyone. Those who are not having a proper knowledge or have not any idea about it. Now, people ask me that how to enter into the stock market, which stock should I purchase first? So I must say that if you are very new, you are not having any experience of the stock market, but still you are having some money, okay, along with you. So my first idea, when should you invest into the stock market or what is the right time? So as we discussed earlier, first you should look at your emergency fund. If your emergency fund is ready, okay, then if you are putting some amount in your short term goals, in your long term goals, in your medium term goals, if you are investing for those goals, after that if you are having some amount left with you, okay, then only you should enter into the stock market. What do I mean by that? That should I invest mutual fund? Yes, mutual fund is a good way. So when you are thinking about the long term goals, so long term goals should be cater with the help of mutual funds. Okay, will be discussion if you will be having any question. Most of you must be having different type of mutual funds with you, so that is to be chosen wisely, that in which mutual fund should I need to invest. Okay, so uh, but if I'm having medium term of goal or short term of goals, so again already discussion we have had that in debt funds you need to, or in debt securities you need to invest. But after taking care of all those parts, if I'm left with some of the money, it may be 5,000, it may be 50,000, it may be 5 lakhs. Okay, it depends on person to person how much money I'm having. So can I invest it in directly to some stock? In mutual fund you are having a basket of stock and some mutual fund manager is taking care of that. So you have no need to worry for that because already you are paying some money for managing that fund. But if you just directly want to earn something from the stock market, where you are buying some stock, selling some stock, for that you should need to learn first. Okay, but and how to enter, because I feel I agree with this point also, that just keep on learning is not the only way to learn about the stock market. Practical example is much required, and I have learned with that way also, by doing practicals where I was wrong many a times, where I was correct many of the times. But yes, you will have to take something on your risk. Okay, then you will be learning very fast. So again, to lose there should be very I must say less losses. So there are the good examples or the good ways where you can enter or by which you can enter into the stock market. First one is the IPO. So in recent month, I must say that there were two great IPOs which we have seen. One was the Happiest Mind, another one was the Root Mobile. uh, so that was one way where you can have your capital doubled, or even at least 50% return you may have if you are applying in a good IPO. Okay. And in just in a week of one time or 2 weeks, your return will be either will double, or you will be getting a I must say gain of more than 50%. Okay. For that, you will have to choose IPO wisely, in which IPO you need to invest. What is an IPO? So it is what? Initial public offering. When some company, which is not currently yet listed on the stock exchange, now that company want to get listed on stock exchange. So they come with an IPO, which is initial public offering, where they offer their stocks to the general public like us. And we bet they create some price, which is the bid price, and the price at which you buy, that is the bid price. When the company will be listed on the stock market, that price may be higher than your bid price. So that difference you may earn. And if the IPO is good, if the company is good, okay, so definitely there will be a gain. So recently, the two IPOs which I talked about, the Happiest Mind and the Roof Mobile, there was a gain of more than 100%. But there is one limitation. If now people are thinking that can we invest 2 lakh rupees or 5 lakh rupees or any amount in the IPO? So you can invest, but there are very less chances that you will get the IPO. So there are different methods which we opt to get the allotment in the IPO, because very less quantities are being offered to the public, and there are too many buyers. So the getting the allotment in that IPO is very less. So how to increase that one? So again, you may understand it's a kind of lucky draw thing, where you apply an application for the allotment, and if you get that one, definitely you are going to have some profit. So your debut into the stock market will be very good, because we always remember, when I enter into the stock market, I always wish my first trade should go very well, or I should end up with the profit. So how to make that your first transaction memorable? Okay. So the first good way is the IPO. Okay. Second one is the exchange traded fund, which we usually call ETF. And the third one is the index fund. For the index funds are basically the mutual funds, and they copy the Sensex, okay, or I must say the Nifty 50, or there is Nifty IT, there is Nifty banks. Okay. They copy the index. So just in a simple layman term, if I talk in this way, that if anyone, or if you know that currently, if I talk about Nifty 50, okay, the current market, I must say not price, the current Nifty 50 index is lying at 11,000 level. Okay. But when it started with 100 points. Okay. So when it started with 100 points, and now it has reached at 11,000 in a period of 30 years. Okay. So definitely index funds usually move in a upway. It will go down, but at the end it will come up. While what happens if I buy from a stock, if the company is doing good, the price of the stock will rise. But if the company is facing some challenges, so the price of the stock may fall, and it may fall up to the zero also. So there are many examples. You may go through it. I just want to take any name of any company here. So there are many companies where the prices of the stock was touching about 1,000 rupees. Now those stocks are available. Either some of them are available at 200, some of them are even available at 10 rupees or even less. Okay. So if we are investing directly into the stock, there are higher risks. But when we start investing in the index fund or the exchange traded funds, so there are chances that we will having loss. But if I look at the broader picture, or if I'm looking at the longer period of time, you will always be in profit. So if people are having some amount and they want to learn in stock market, so I must say you should need to do some practical, then only you will be learning in a faster way. And these are the three ways where you can start with. For more learning about this, so you may contact me later on LinkedIn. I will definitely be helping you over there. So for requirements, again, the first requirement will be capital. So as I said that when you're starting with the stock market, either with the ETF or with the mutual funds or with the IPOs, you will require capital for sure. Okay. And you must have a demat account from where you can apply for all these things. And the another two major requirements are the patience and the discipline. Okay, so now I'll be discussing about on this patience and discipline, that people usually have noticed this thing from many of the person, that people will usually say this thing to you, that you must have patience when you are investing anywhere. But people usually don't uh, tell that thing, that how much patience should we have. So as I have discussed earlier, that if you are looking for a long term goal, your patience level would be of some years. Okay, it may happen that that security is not performing well for 1 year, for 2 year, or for 5 years. But if you are having a vision or a goal for 10 years or even more, so you'll have to be patient that way. Okay, so what should be your discipline level? So you must be disciplined in that. So if you have made some rules for yourself, that I should keep on investing, when we start investing in mutual funds through the SIP, so many people think that now the market is getting down, why should I invest in SIP? So either the market is going down or the market is going up. You never break your rules. You keep on investing when you are having a long term goal vision. When you are having the short term or the medium term, so for that you would be having different rules or the different time frame. So we'll be discussing with your queries whatever you will be having, but these are the four major requirements. So now if I talk about the patience level, so my two questions are there to each one of you. Just think about it and try to answer these. That have you seen grass growing? So usually everyone will say yes, we have seen grass growing. So but do you measure it on the daily basis? So my answer or your answer may be yes or no. Many of say will be saying yes, but I must say that most of us will be saying no, that we usually don't measure it on a daily basis. What happens that we are looking at the lawn and we see that there is no grass, but suddenly on some day we observe that the land or the lawn is full of grass. Okay, that happened usually, but is that happening usually or suddenly in one day? No, there is a process, and that happens at a very slightly, I must say the growth rate is very less, and we keep ourselves busy in the other activities. So on a certain day, okay, when we are observing the lawn or the land, we observe that now we are having enough grass, and yes, it has grown now. The same thing happens with our financial portfolio also. Now the things have become so much easy that in our mobile phone we are having all the investment details. We are having the track of the market, either the market is going up or down, and we keep looking at our portfolio. But if you are doing that in on daily basis, you are harassing yourself, I must say. Okay, because that will not grow in a single day, that will not grow, or that must not crash down in a single day. Okay, it will happen. Usually you have already identified your targets, you have defined your goals, so let it take the time, because it will not happen in a single day. So it's a waste of your time. You should not look at your portfolio on daily basis. Just have a look in some period of time, either your portfolio is doing good or not. If you need some, like if I have taken the same example of grass, we observe that after a month even we have not seen any growth in the grass. Now we'll put some type of I must say the fertilizer over there to keep the grass growing. So after few months, if you feel that your portfolio is not offering you good returns, you must contact your financial advisor and look at it, that what is going wrong, what kind of fertilizer you can add it over there. Okay, so that happens. So this is from my side on the patience level. So what type of discipline you must carry over there? So as we discussed that it's a journey, and we should never break rules. Okay, either investing or trading. We'll be giving you a brief idea about the investment or the trading thing. That investment, when we talk about the long term thing, okay, we just keep on investing, we just keep on investing, and my idea is for a long term vision. Okay, but what is trading? Trading is simply we are buying something at lower price and we are selling that. My trading portfolio is different, my investing portfolio is different. So when we are trading there, so we are having this vision in my mind that I am buying at a lower price and selling that at a higher price. And that particular, that in how much time I'm expecting that gain, it may be a 1 day, okay, it may be a week, it may be a I must say 2 to 3 months. But if I'm having more than 3 months, That means I'm not doing trading. So my trading has converted into the investment. So investment usually starts from 3 months or 6 months to several years. So that is what the difference between investing and trading. The idea behind both is to gain some something from there, additional gains from there. Whatever we have put over there, I should get better returns from there. But the time frame is different. And the second rule, or I must say, this is the only rule that you should never break your rules. So while investing or trading, you will be having different set of rules for yourself. You just stick to them. Okay. There are stop losses where you just cut your stops. You want to preserve your capital. That is what my first idea when I'm into the stock market or whenever I am investing for any direct type of investment. I want to cut my losses. Okay, for that I want to preserve my capital, because if I lost all my capital today, what will I do tomorrow? How will I be into the trade again? Because as we said, requirement, my first requirement is the capital. So the capital preservation is the first first foremost point in your mind, that rather than focusing on the growth or the profit, your first foremost rule must be saving your or preserving your capital. Whatever initial money you have bring to this stock market, you should need to save that thing. Okay. uh, Now, this is what my initiative, where you can see there is Learn Academy, where I'm focusing on learn more to earn more. So what happens, as I discussed, people usually keep focusing on earning. My idea is you just need to learn everything first, as we discussed that when we are going into the stock market. Okay, so I should not directly focusing on what earning. My first idea is I should focus on learning. It happens that when we enter into some job, did you get your job directly when you entered into the college? So no, we invested 3 years, 4 years while learning, and after learning, we are getting some job, and there also we are fearing about whether my boss will throw me out from the job or not if I'm not doing well. But when we come to the stock market, we think that on the first day I should earn. Okay, so that never happens, and even if that happens, in a longer time you will be exiting from the stock market with a loss and you will never look back. So that should not happen. You should learn first, and then earning will happen automatically. For that, you can WhatsApp me or call on that number. My team will revert back to you. Any type of query, either opening your demat account, or if you are having that, what type of goals you want to set, you just text your query. My team or I will reach to you. Okay, and will be giving you suggestions, and what you just you will be getting different type of materials from there, so that you can learn that. But again, before moving into the stock market or before making any investment, you properly take advice from your financial advisor, your spouse, your family, your friends. Okay, so that should be done. Don't blindly trust anyone. Okay, when you are putting your money on stake. Okay, so that is the disclaimer as I was talking about. Okay, so this session is strictly for the educational, as I have said. So you should take anything at your own risk. You can read this one. I'll just give you 30 seconds for that. Okay, so I want to thank HR Association of India and all the sponsors and team members for allowing me to connecting you with guys. And now I am ready to take your queries. I can see some of the queries are there in the chat box. So those whosoever is asking any query, so kindly I'll be please, if you open your cam on and you are directly communicating with me, I go off from the PPT so that we can have the big faces over there and we can interact directly. So I can see first query is there from Chetan.
Okay,
Sir, I have invested. Yeah.
Ankit, yeah. Okay, so before we move ahead into Q&A session, we'll
Yes.
be initiating a poll requesting all the participants to kindly share your feedback, uh, and also to post the questions in the chat window, and or just raise your hand. We will allow you, we'll allow you the mic and the video access. I hope everybody took your number. Okay. Uh, so Radha has a query and I've given her the mic access. Radha,
Yes.
yes, please feel free to ask the question.
Uh, yeah. Hi, Ankit. So
Yeah, hi Radha.
I have a question about assets and liabilities. So we usually consider buying a home as an asset, but some
Yes,
experts say that when we take a home loan for a very long term, we end up
yes,
paying very high interest, and that is considered to be a liability.
yes.
So, can you throw some light on that, like whether it will be an asset or a liability, and in what case it will be an asset, and what case it will be considered as a liability? Because we usually buy a home considering it as an asset. So,
Yes,
experts say that it is not an asset for us, but it will be an asset to the next generation to whomever we pass
correct.
it on. Mm.
Correct, correct. So it
So, is
happens
that correct?
like yeah, I'll just take your query on this point, that what happens when we are looking for a house, or we are looking some for property, if we are looking it for a consumption purpose. Okay. Now before moving on to that, I must say that earlier people usually invest in properties, and they used to buy it at some price and they were selling it at three times or even 10 times of the prices. So that time has gone. Okay. I must say that we are in the 10th generation of that, that we should, if we start thinking about investment in a property, okay, or in the real estate market, we are the 10th generation. मतलब लोग वो सब कर चुके हैं, and now we are thinking about the same thing, so returns are not much higher in that. Okay. If I think about the fixed deposits, okay, we are the seventh generation, and you people have seen the, in the crisis time, the financial, I must say, the return on the FDs are less than 6% in many of the good banks. Okay. So if I put 1 lakh rupee in the FD, after an year I will be getting 6% return, 6,000 more rupees. On that, I'll have to pay some tax also. If that 6,000 is, that 6,000 will be added to my annual income, and if that comes into the taxable bracket, it may happen that on that 6,000 you'll have to pay 20 or 30% of tax also. Okay. So again, that return will get decreased. Okay. So now if I think about the mutual fund, that is a good idea. Okay. Rather than investing into the property or in the fixed deposit. But again, we are the fifth generation in mutual fund. Many of our generation were investing in the mutual fund. The latest trend which is going into the stock market is financial derivatives, which I usually keep discussing on in the different institutes. So in financial derivatives, we usually trade. Okay. We enter into that one as a business mind. And my idea and my expectation is I'm expecting 3 to 10% of monthly return. So even if I can, if you learn financial derivatives and if you have understood that very well, so you keep on working in your job, and side by side as a passive income you may earn at least 3% from there if you have learned that properly. Okay. Otherwise what will happen, by chance आपको कभी भी उसके ऊपर 20% 50% gain मिल जाएगा in one transaction, and then you will invest your big amount over there and you will be ending up with the loss. So learn first, and then earning will happen automatically. I'm again saying 3% per month, so in a year you will be earning more than 35%. Okay. If you are just, if you are very cautious and you are doing that with very I must say very carefully. But if you are an aggressive trader, so people are earning 10% on a monthly basis. So in a year, your capital, whatever capital you are infusing in that, that may become double. So we are in the third generation of that. So now after few years or after a couple of decades, that will be having something another over there. Now I come on to the Radha's question. So Radha, what happens when we buy some home? So again, as if I'm going to use that house, okay, if you are living in a rented house, you are paying the simple idea for everyone. If we are living in a house where we are paying rent, Rather than paying rent, I must buy my house, and for that I must pay the uh, EMI, monthly EMI. Okay, so that is a good idea. But what happens if you are going to use that particular house which you are buying on EMI? If you are going to use that for a longer period, for 10 years, for 15 years, if you are going to be in the same city, okay, then I will advise you, like my personal suggestion, it may differ again from people to people, that my personal suggestion, I would be thinking about buying that house on EMI. Again, my first idea, that I will try to uh, like settle the initial amount as much as I can do. Okay, and will try to have very less EMI for the next period. And that also, if I have taken the EMI for the next 10 years, for the next 15 years, so I will try to cater that one in a very less period if I am having ample amount. Okay, because what happens, which you are talking about, the liability thing, and it will be passed on to the next generation. So we are living in that culture, our nation is like this, we are having that society or that culture, that usually whatever the people are having, they pass their property. Even you also, I don't know, I should not comment on that, but you will be getting something from your parents, and which we are going to pass on to our next generation. Okay, we are
Yes.
not in the developed countries where they usually consume everything whichever they produce. So if you want to pass on that thing, so that is good. But yes, buying a house is a long term process. Okay, so if you are having initial capital at your own, and you can put all the money and buy the house, that is fine. But if you are looking that yes, you will be going on an EMI process, so if you are going to use that house for the next 10-15 years, so that is a good idea. But if you are thinking that for the next 2 years you will be in this city, and you buy this house, and then you will be flying to the another city, and because nobody will take care of this particular house, and you will be paying EMI for this house, and you will be living in another house which you would have taken on rent. Okay, so this much I must advise you, that if you are thinking to be settled down a single city, yes, you should definitely, because owning a house is something good. And at the later end, in future, uh, you will feel privileged, and you will not be in any situation that you're not having any house. If this type of corona thing or the any another pandemic happens, so people will be in a better situation if we are having our own house. That rent situation, because after a couple of years or a couple of decades, if when we retire, so people usually think you should be having for your own. Rather, it will be passed, everything whatever we are having for us, it will be passed on to the next generation after our death. So either it is the hardcore cash, or the house, or any jewelry, or anything. So don't think about that much. Think about the present, and that's definitely not a liability or not an asset. It depends on your situation, that in which situation you are currently in.
Okay, thank you.
Yes.
Great, great. So we have a next question, Ankit. And this is from Chetan. Sir, I have invested money in mutual funds, SIP, but the current value is down. What do you suggest?
So Chetan, what happens when you started investing in SIP? What happens that again, SIP, if you are doing SIP for the purpose of saving your taxes, okay, if you are lying into the income tax liability, okay, where you will have to pay some tax, people usually start saving for that purpose in SIP. So SIP is a long term goal, okay, where your goal is of 5 years, 7 years, or even 10 years, okay, even 3 years also. But when the market is down, it's an opportunity for us. It's an opportunity for us that you should never stop your SIP. And SIP is what I may stop investing in the short term folio or the medium term folio. But for myself also, the SIP is a long term wealth creation too. So you should never stop. And when you see market has, as I told you, that the index started from 100 and now it is at 1100, okay, which is representing the overall market. So when it drops down from there, I will put some lump sum money also in the mutual fund portfolio, because again after few years it will definitely go to 11,000 and it will reach 15,000 or even 20,000. So if you are having a vision of long term, if you are having an idea of 3 years, 5 years, or 10 years, then you should definitely go with the SIP. And as I said, don't look at the grass on daily basis. It will not grow in a single day. Okay, you just keep your following your rules, and if you are having a long term vision, it will definitely give you a good return. And when you see that the market has corrected more than 25% or even 30%, so if you are putting an SIP of 10,000 for an example per month, so if you are having a capital of 50,000, so you invest lump sum amount when the market has corrected. But let's suppose if I come into the market as a new investor and I am having 1 lakh rupee, I ask somebody where should I invest. So, or before looking or asking for any advice, I directly put my 1 lakh rupee into the market, which is at the top. Okay, when the market is booming and at the top, I put my 1 lakh rupee immediately. So that will be a problem, because what happens if the market corrected, my whole 1 lakh rupee will start correcting. Okay, and my time value of money will start decreasing. So what happens, you follow your SIP is what a very great tool. Okay, it will be catering your long term goals, but don't invest lump sum amount just when you enter into the market. Look, when the market has corrected, you guys have seen that those who are doing SIPs in their mutual fund, you have witnessed that there was overall loss. Whatever you have put your money over there. So when you see there is a loss, don't worry about it. You are having good period. If you are having some lump sum amount, just put it over there. Okay, not in the one phase. So if you see that the market has corrected 20% and you are having some good amount with you, you just put 25% of your money in a lump sum. If market goes down more, you put more 25% of money. And which money I am talking about? After catering your emergency fund, after catering your short term, medium term goals, so then in SIP you put your money in lump sum, because that is going to be for a long term perspective. So everything is connected. It's a journey. You should enjoy it. Everyone should enjoy it rather than doing your job. Everyone is having a personal finance. Okay, so everyone should have knowledge about it.
True, true. So
So
that yeah. So
Tushar
there's
is
an
also having the same
correct,
question. I think
correct,
in
correct.
current time of crisis, how are SIP portfolios going to impact it? What should be done to minimize the risk aroused due to dull economy? So Tushar, as I already said, so it's a golden period for us. It's a golden time for us. When the market corrected down and you are doing SIPs, that's a good time, because now you are putting your monthly installment at a very lower rate. Okay. So after a couple of years, the market will be, again, economy will be doing good. It may happen that the economy may start doing good in 6 months or any in year or 2 years or 5 years, but accordingly you will have to think what type of goal you are having. If you are having just a short term goal, I will again suggest don't put your money in the SIPs. Okay, because SIPs are directly putting your money into what? If you are putting your SIP in the equity fund, it will be corrected with the market. If the economy is going down, your money will be in the red zone. Okay, so Parvati, okay. Next, Vanita. Next question. I think not
So
having.
Vanita
If
has a
any.
question. Yeah, Vanita has a question. Can you please suggest for upcoming IPOs we can invest in?
Okay. So Vanita, recently I myself invested in Camcon. So three IPOs were there in the last 2 3 days. The deadline was over. Now new three IPOs are coming in a window of 29 September to 1 October. So in that, I feel that for the time being, I have studied UTI AMC IPO. The another two IPOs are also there. So you can text me over there on the number which I provided to you earlier. Okay. So what happens? I'll put that in the chat box also later on. In the or Sham will provide it to you. You can text me over there. Whatever my suggestion on that, I'll keep on pushing. It's an IPO season, I must say. In the same month, we have witnessed two IPOs, now three are there, 8 IPOs. And IPOs are like, as I said, that uh, every IPO is not going to give you a good return. So when choosing IPO also, you'll have to be very careful. And if an IPO is good, the more application will be coming over there and the allotment chances will be getting less. Okay, that's okay. But if you get some allotment, your return will be more. I must say at least 50%. It is a good IPO. So just to brief some more light on this IPO thing, when we apply for IPO, people should not think that, sir, I am not having that much money. Should I need to apply for IPO or not? So for applying for an IPO, usually, or I must say every time it has happened, which I have witnessed, that every application will cost you around 14,000 to 15,000. Okay, not more than that. So if an IPO is good, I will suggest you apply only for one application, which will cost you somewhere around 14 to 15, and you have no need to pay that. Your bank will, I must say, keep that amount blocked. If you get the allotment, it will get cut down from your account, and your shares of that particular IPO will be available in your demat account. If you don't get the allotment, that blocked amount will be released and it will remain in your bank account. So there is no harm. And if an IPO is good, definitely you are going to. So recently I got my money doubled, 15 to 30. So that's a quick thing, which I usually apply in IPO for the listing gain itself. So that's a quick amount which you can use, and that will become a memorable part for everyone, those who are looking for the initial step or the debut into the stock market. So, Vanita, you can connect with me on, I must say, LinkedIn, on or through the mobile WhatsApp. So I'll let you know that which IPO I'm applying and what is my take on that one. How much listing gain you are going to get over there.
So there is one last question from Shweta. Can you please share more about derivatives?
So Shweta, derivative is what? Yes, I would be discussing more, would like to discuss more. Again, I would suggest you to connect with me. Soon, what I am going to do, I'll be briefing about. I have a private channel on YouTube, so I am thinking of to make that public. So we'll be sharing you the links for some of the videos, because it cannot be learned in just 5 minutes or even in an hour. So if you are very new about derivatives, so it will take a lot time to discuss about that. But if you are comfortable with the derivatives and if you have any specific query related to that, you may ask me, that I will be able to answer that one. If you have some basic knowledge about derivatives, so that I can definitely. But again, if you are very new to derivative, it is not a good time to discuss that one.
Understood. So anyways, we are at 4 p.m. already. And thank you, Ankit, for such an insightful session. I'm surely taking a lot of learning, and I'm positive all our participants had a great time in this session on how to manage their finances, expenditure equations, insurances, goal planning, investment in multiple segments, and way to enter into stock market. Ankit, truly it has been a pleasure being with you today.
Thank
So,
you, Shyam. So yeah,
yeah, thank
yeah,
you.
Ankita is there. Yeah.
Great, great. So before we could conclude with today's session, we would also want to thank all the association members, that is Gishia, NASCOM COE, and LinkedIn Local for supporting this HRAI events. To know more about this association, request you all to kindly visit the link provided in the chat window. Thank you once again, dear speaker, and our participants for joining us today. Do join us for our next masterclass tomorrow on Art and Science of Giving Feedback by one of our favorite speaker, Mr. Rohan Lele, on 27th of September 2020. Request you all to kindly register from the link mentioned in the chat window. Also, do join the masterclass WhatsApp group through the link mentioned in the chat window. That's it from today's webinar. See you tomorrow. Stay safe, take care, and bye for now.
Yeah, thank you, Shyam. Thank you, everyone, for
Thank
attending
you,
the
Ankit.
session. And yeah, thank you.
Yeah, great.
Ouch.
So we conclude with today's session. Thank you all for joining.